Hey guys, welcome back to Vertical Momentum. I'm your host, Richard Kaufman, also known as the Comeback Coach. Guys, if you're a small business owner, you need to listen to this podcast. Make sure you save it so you can share it and listen to it again, guys. Because taxes, as we all know, is our biggest expense. And if you listen till the end, we're going to tell you how you can possibly lower your taxes every single year. Brady, brother, welcome to the show. Now, this guy, if I have tax questions, he's the guy that I go to. He's the guy I trust with any tax questions for the show. So, Brady, brother, welcome to the show.
Thanks for having me on, Richard. I'm excited to jam today. Thank you.
I love it. So, before I even get started, because I do have a traumatic brain injury, and if I don't ask the question, I'll forget it. What is your definition of resiliency?
You know what? I think my definition of resiliency has just come down to the fact that you just keep going. And I know it's cliche, no matter how many times you get hit, you just keep getting back up. And everyone says that, but the reality is very few actually do that. And, the people that set themselves apart are the ones that can continue to get up day after day and do the hard things and just keep going and find the joy in that. That has become what I think my definition of resiliency is.
I love it. And Michael, I just want to say thank you, brother. He sponsors our show. He actually makes homemade knives. He was on that show, Forged in Fire. So you guys, if you love knives, check out Mike's Damascus Knives. Amazing guy, amazing dude, and a veteran. So let me ask you a question, before we even get started. Where'd you come from? Where'd you grow up? And how does a person get interested in taxes? For me, it sounds like the most boring thing in the world. So how did you get involved?
Well, to be honest with you, it sounds kind of boring to me too, so don't feel like you're the only one. I born and raised in Utah. To be honest with you, I don't know that I'll ever leave. Me and my wife are both from Utah. Truth be told, we love the cold. We love the snow. We like raising our two boys here in Utah, and we love to get away in the mountains. But I'd actually gotten home from a 2-year church service mission to South America, and I didn't really know what I wanted to do, but I knew I wanted to make a lot of money, and I knew that accounting was the language of business. And so while I was in school, my now father-in-law was like, hey, my accountant, he runs a very successful business, my accountant needs some help. You want to go work for him? And so I was kind of tripped by my father-in-law. At the time, it was my girlfriend's dad, and he kind of tripped me, and my girlfriend, who is now my wife, she pushed me, and I kind of fell into accounting. And then while I was studying accounting, I was also studying, I was a double major studying in personal financial planning as well. So I really loved the planning aspect of it and how to make people more money and grow. And so I kind of fell into this weird tax realm where I don't think people realize how much planning actually goes into it. And the more you plan, the more successful you can become. So I kind of fell into that niche, and oddly enough, I love it. So that's kind of what got me into it.
Now, like I said, a lot of the people that are going to watch this are either they're veterans or entrepreneurs. We call them vetpreneurs. And a lot of us, when we start our company, the last thing we think about is taxes.
Yeah.
Until we get hit with the tax bill. So, and that's why I wanted to have you come on, because a lot of the small businesses, we don't realize the tax breaks that we can actually get.
Yeah.
So what I did is I put out a post on some of my business channels, and they have a couple of questions for you. So if you wouldn't mind asking a question or two.
No, go for it.
Sorry, I got my phone, but that's the only way I can go with. Number one, what are some common tax deductions and credits that entrepreneurs often overlook?
So, well, okay, the truth be told, Richard, sometimes it's almost easier to talk about what we can't write off versus what we can write off. Because the IRS defines a deductible expense as anything that has a business purpose, anything that is necessary to produce income, and is ordinary. And as long as I have some sort of documentation to show that expense, I can write it off. So I think if we're going to go common deductions that people who are starting out or people who have a small business miss is typically vehicles. some sort of home office deduction if they're using their home for any business purpose. Travel expenses are typically expenses that are overlooked. And those are typically deductions that you're spending money on regardless. And if they have a business purpose, you might as well be writing them off. So that's kind of, and I think the other thing to keep in mind too is just because you do or do not have like a registered LLC or a registered corporation does not mean that you can't deduct those expenses. Anyone who is creating income in a self-employed manner has the potential to write off the same deductions that someone who has a registered LLC or corporation can as well.
All right. So, like I said, I'm going to go back to the questions, but I had somebody, they messaged me on Sunday, and I'm like, I got this awesome dude coming on. He's going to answer the question because if I don't know a question, if it's not my lane, I'm not getting involved in it.
Yeah.
I know my lane. I dominate my lane, but if it's not in my lane, I don't mess with it. So when a person is starting a business, is it better to spend the money to, become a corporation, or is it better to be sole proprietor? What is the best for tax strategy?
Yeah, really good question. And part of the answer to this also involves some legal implications. So I always advise individuals to consult with both your accountant and your attorney to determine whether or not the deductions or the entity that you're going to create is going to provide you with the best overall protection. But really what it comes down to, in my opinion, is, are there assets or liabilities that I need to separate when determining whether or not I need to create an entity like an LLC or a corporation? Is there a product or a service that I want to, advertise or market other than maybe my own name, image, or likeness? And then what is the potential tax consequence? Am I going to be making a lot of money, or is this passive for me? And based on those three factors, I can determine what entity I should create. Now, to give you the blanket statement, I typically advise individuals to start an LLC because the LLC is going to provide you with the most amount of flexibility as you grow. I can elect to have the LLC be taxed as an S corporation or a C corporation, or I can bring on other partners into this LLC. And the LLC typically provides me with the most amount of flexibility. It also provides me with the most potential opportunity to take money from the business and pay myself as needs be, whereas there are some restrictions to wages and dividends in a corporation. So starting out, my recommendation would be the LLC.
Okay. Second question was, what are the key differences between filing taxes as a sole proprietorship, partnership, or corporation?
Well, the filing requirements are very different for a sole proprietorship and a partnership. Now, technically speaking, if I have a sole proprietorship, I have nothing. I have no registered entity. I typically don't have an EIN number. I really, at this point, probably don't have very much liability protection because I don't have a separate entity. And so I typically file the income and expense information on Schedule C of my personal tax return, right? Now, if I were to get an LLC and I am the only member of that LLC, that would be called a single member LLC. The income and expense information is still filed on Schedule C of my personal tax return, but now I've created an entity which has a separation of barrier as long as I maintain some of those statutes, right? Like the financials, I maintain my legal documentation and so forth. Now, a partnership, because you mentioned it, files a separate tax return. It's called a 1065 partnership tax return. And a partnership tax return is filed when there are more than one partners in one LLC. Okay, so that's important to know. And now a corporation might be entirely different because a corporation is an entirely different entity that you register with the state within which you reside in, right? And a corporation has different rules. They have different laws. you now have to take into consideration different ways that you're now going to pay yourself or take dividends. And the way you can move money in and out of that corporation is actually pretty different than an LLC.
Okay, and I love that. Like I said, a lot of these questions that they came from brand new business owners. So you're
Yeah.
giving some great insight, and I just want to say thank you from the bottom of my heart.
Oh, no, you're
How
welcome. Thank you.
how can entrepreneurs effectively manage their tax obligations while maximizing their deductions and minimizing their liabilities?
Well, this one is, quite frankly, it's easy for me to understand how to do because I do this on a day-to-day basis. Now, most entrepreneurs by default are not accountants. And so it's hard for them to balance the sales, the processes, the advertising, the legal, and the accounting while trying to fulfill and make money on their business. So my first piece of advice would be to find an advisor that you like, that understands your business and that you trust, and work with them so that they can help you understand your numbers. I think a lot of accountants, when asked that question, Richard, will tell you the obvious. The less money that you make, the less taxes that you pay, right? Which, quite honestly, I think is not great advice because I'm not in the business of necessarily running a charity, meaning I'm not trying to just give money away, right? Whether that's to someone else or to the government. I'm in business because I want to make money. I want my revenues and my profits to be as high as possible. My second piece of advice, and although this sounds a little oxymoronic coming from a tax advisor, don't ever let the tax tail wag the dog. I think this is another position that a lot of people get themselves into is they're so worried about paying a tax that they don't want to make more money, right? But the average tax rate in America is 24%. So worst case scenario is if you go make $1, 30 cents of that is going to Uncle Sam and you're still going to keep 70 cents. Now, obviously there's a lot of things that we can do to help avoid still paying that 30 cents, but don't ever put yourself in a position where you're so caught up on and worried about paying a tax that you don't go make an extra dollar.
Okay, so before we get any further, I want to thank our sponsors for today's show. Guys, you know, I was with GNC for over 30 years. I was with the military for 23. I like pre-workouts. I like energy drinks, but most of them tasted like ass. Or I'd have to run to the bathroom 5 minutes after I took it. So I started my own vertical momentum coffee, high energy coffee, twice the caffeine, twice the energy, no crash. Best part of it, 100% of the coffee is veteran hand roasted. And the best part is 100% of the profits go to help veterans struggling with PTSD and homelessness. So for every bag you buy, we're going to be able to take 12 veterans and their families, take care of them for the whole year, physically, spiritually, emotionally, for 1 year with zero cost to the soldier. So for every cup of coffee, every bag of coffee you buy, 100% of the profits go to help veterans struggling with PTSD and homelessness. And also, guys, if you're ever in New Jersey, the best Italian food you can find is Muriel's Trattoria. Amazing company, and the mom is literally like my dad, off the boat from Italy. So everything you're eating is actually handmade. Even the spaghetti is hand rolled and handmade. So, guys, if you love Italian food and you're in New Jersey, stop by Muriel's Trattoria, check them out, tell them I said hey. So now let me ask you a question because, you know, I know that a lot of people struggle with taxes, and I had the same mindset until I interviewed the guys from Rich Dad Poor Dad, and they were on the show, and they're like, "I love paying taxes," and I'm like, "Wait a minute, repeat that." He says, "Yeah, because if I'm paying taxes, that means I'm making money." And a lot of people were, and that kind of flipped the whole script. Because, like you
Yeah.
said, a lot of people are worried about paying taxes. But for me, if I'm paying more taxes, that means I'm making more money. But, like a former president once said, you should use the tax code to your advantage. So, talk to us. Like you said, there's a mindset between
Yep.
when you're a business owner. People saying, well, I don't want to pay. Well, if you're not paying taxes, it means you're not making money.
Yeah.
So talk about the mindset of taxes for a small business owner.
Yeah, well, funny you mentioned that. So there was actually there was a small study that was done. I think it was performed last year, and what the premise of this study was to find out, what people's reactions were to taxes. So the question that they asked for this study was, would you rather pay the IRS $1 million in taxes or $5 million in taxes? And the overwhelming majority said that they would rather pay $1 million in taxes. Well, if the average rate of a income tax here in the United States is 24%, and you're only paying them $1 million, you're only making in between $4 and $5 million. But if you're paying them $5 million, you're making between $20 and $25 million, right? So the mindset when it comes to taxes, I would argue that the vast majority are scared to the point where they would rather not pay a tax, only because, Richard, they don't know enough about taxes. And this is, I think, really one of the reasons why I dove into taxes as much as I did, was because it provided me with an opportunity to help people. Taxes are not a subject that we necessarily learn in school or really even college. However, it is, like you mentioned earlier, your life's largest expense, whether you want to believe that or not. Most people work the first full quarter of the year just to pay their tax bill. You work 25% of your life just for the government, right? And that's true for the majority of people in the United States. And so the mindset around taxes, in my opinion, is such that people put that on the back burner because they don't understand it. And because they don't understand it, they're scared of it. But if they understood that the more you make, the more you actually have the potential to save. Because the more you make, the more things you can do that the government might want you to do, and they will incentivize you to do through the tax code. But it comes down to a lack of understanding and education.
And I want to give a big shout out to my brother Joe, amazing dude, Marine, changing the world, and I love Joe. So, like you said, he's winging it, and a lot of people, including myself, when I first started, are just winging it. We're like, yeah, whatever happens, happens. Whatever bill comes on April 15th, then that's what's going to happen. But I've had gentlemen like yourself on. I've had many millionaires and billionaires and authors, and a lot of them say, the best thing you can do is, especially if you're new, start a side hustle. Like I was driving for Uber a couple years ago, and I would pull into the lot and I would be talking to everybody, and they're like, yeah, I'm doing this for a hobby. And I'm like, bro, I started an LLC, I got a brand new car, I got a new phone, I got all this, and I'm writing it all off. I have it as a business. It's not a hobby. But everybody's saying, well, why should I start a side hustle? Because the side hustle can save you a lot of money if you do it right. Correct?
Well, it's funny you mentioned the Rich Dad Advisors earlier. One of my good friends and mentors is Tom Wheelwright. He's a Rich Dad Advisor and author of Tax-Free Wealth and the Win-Win Wealth Strategy. And he often gets quoted by saying, if you want to change your tax, you have to change your facts. And absolutely, if people, change the mindset to hey, maybe I am running a small business, or they change this hobby, if you will, into an opportunity that just makes them more money, it creates more opportunity. So I think you're right 100%, Richard.
I love so, and like I said, I'm definitely no expert. I mean, I'm a ninth grade dropout. So, but all the people that I have on the show, hopefully I learned something. Hopefully I learned something over the last 1,000 episodes. So, question number 4: Are there any recent changes in the tax laws or regulations that entrepreneurs should be aware of in 2023? I think today is like June 23rd or something. So
Yeah.
anything new coming down the pike or anything new that just happened?
So recently there were some bills that were introduced by House Republicans that could potentially increase standard deductions and dependent credits. That's one that's kind of pending. We'll see if that one passes with the Senate and then our president. It This time of year or this time of cycle, it's always interesting to see what new tax laws are drummed up, because tax law, I would say, is cyclical, somewhat depending on elections and who is trying to push for the opportunity to be elected. So we'll see what happens here as we move closer to the end of the year and see if the Biden administration issues any new proposed tax legislation trying to get another vote in as president. But I think for 2023, there's a couple things that are important to highlight, especially as it relates to you and your audience, Richard. One would be depreciation. Depreciation is a big deduction that business owners can take on assets. For 2023, it is 80% of a potential bonus depreciation. Next year, that bonus depreciation moves down to 60%. So one thing that you might potentially want to take advantage of. The second thing is right now there are some really great tax incentives for tax credits for hiring veterans. So that might be one that some of your audience members might want to pay attention to and talk with their accountant about on getting some tax credits for hiring veterans, because that is one that might be applicable to a lot of people.
And me and my friend David Nordell, he's one of the sponsors of the show. That's something that we're actually going into businesses and telling them, listen, you can get, I think it's up to like a $9,000 credit for hiring a veteran per year. But also if you hire a disabled veteran, now you can go in and you can put ramps up and you can do all this, and it's all tax deductible.
Yeah.
So, and a lot of people don't
benefits.
realize, like I didn't realize the company I worked for until I sat down with the CEO for lunch when I left. He's like, yeah, I got a tax break every year that you worked for me. Number one, because you were a veteran, but number two was because you're a disabled veteran.
Yep. Yeah. Some great tax benefits.
So I think, that's something that a lot of companies, a lot of CEOs don't even really know about, and now with everything that's going so politically correct, they're talking about, hiring minorities and all this. The veteran, with only 1% to 2% of the population serving, is the ultimate minority.
Yeah.
So I think that's another way also to start getting those tax breaks that, you don't even know about unless there's somebody like on our show talking about it. So last question I have from the public is, what are the potential tax implications of hiring employees versus independent contractors for small businesses? Because I know a lot of people, they don't want to they don't want to hire an employee. They want to hire a 1099. So talk to us, what is the difference and why they should do either or?
I hate to say this, and I don't want to hurt anyone's feelings, but it really doesn't matter what your feelings are. It is entirely dependent on the relationship that you have with the individual you are paying and how much control you have over what or how that individual is working with your organization. Yes, unfortunately, if they're a W-2, I've got to worry about unemployment and Social Security and Medicare and workers' comp and this, that, or the other. But it really doesn't come down to how I want it. It comes down to what is required. Now, this is, take this for what it's worth and make sure you consult with your advisor If you need a consultation, I'm more than happy to help answer some of these questions. But if you are an employer and you have someone working for your organization that you control when they show up, how they show up, what they're wearing, where they're working, what tools they're using to work, odds are is you have an employer-employee relationship with that individual, and the individual needs to be on a W-2. If you don't, if you don't have control over when the individual works, if you can't control how much they make, if you don't control when or where or how they work, meaning they can work whenever and they can make as much money as they want and they can, work from wherever and they're using their own equipment, then odds are is you might have an employee contractor relationship and the individual might be able to be on a 1099. But that's something that you would need to, review with your advisor and determine based on, again, the relationship that you have with the individual or the entity.
All right, so then I got a personal question to ask you because me as a disabled veteran, I lost 80% of my vision from in the military getting hurt, and when I started my podcast and I started a business, I didn't know if there are certain rules that you can't start a business if you're collecting Social Security. And a lot of the veterans that are watching, a lot of them are disabled veterans. So a lot of them, I think, are afraid to start a business because they don't want to lose their disability because they're disabled. So what do they do? What do the people like that do if they want to start a company, but they're afraid of losing their disability? Hypothetically, I don't want you getting jammed up. So I just want to say,
no, I've got to be careful with this because I don't want to put anyone in a situation where they're losing out on a benefit that they otherwise wouldn't get, right? But I also believe that it partially comes down to a mindset. If you have an opportunity, if you've got a product or a good or a service that you can make some money on, go make your money, right? Because your Social Security or your benefits from Social Security are going to be capped. There's only a certain amount of money that you are going to be able to receive from Social Security. And I tell all of my clients when we do tax planning, don't plan on Social Security. You might only make $20, $30, maybe $40 or $50,000 a year from Social Security if you're lucky. But if you've got a product, a service, or an asset that's paying you, and you have control over that, your income earning potential is far greater than a government benefit or a government payout, right? And so that's kind of where, again, don't let the tax tail wag the dog. If you've got an opportunity to go make more money and your earning income potential is a lot higher than the government paying potential, then I would take the income earning potential of whatever good product or service you're going to offer the market rather than what the government is going to pay me. Again, so I don't want to say that and have someone lose out on the benefit because they go and try to do something, but there's a very serious consideration that I think needs to be made.
Because like my old business partner, he said, what you should do is start an S corporation and make your wife in charge of everything and let her get all the money. And I was like, I never thought of it that way. And then I went back into the Rich Dad series, and of course one of the things they first mentioned was starting an S corp, and I was like, I read that book 30 years ago. I should have listened. So talk about that. If somebody is in that situation, hypothetically, because we're not getting you jammed up, like I said, we don't do that here. But if somebody, would that be viable for somebody like myself? I'm not talking about anybody else. So anybody's listening, I'm not talking about you. I'm talking about myself. Would that be something that might be feasible?
It could be. Now, the thing to consider is that when you are receiving, let's say, Social Security in and of itself is typically not a taxable source of income. However, Social Security does become taxable when I have other taxable income sources. So right now, the way that the tax law is written, the individuals that are paying the highest amount of taxes based on the rest of our economic factors such as inflation and cost of living and so forth, are actually individuals who are on Social Security, because Social Security in and of itself do not cover the bills. And so these individuals are then forced to go get second jobs or third jobs. And now what's happening is their Social Security income is becoming taxable. So now they're paying taxes on the Social Security, on the ordinary incomes that they're making. Now they're working 2 or 3 jobs. And so the S corporation could be a viable situation. But for example, Richard, if you and your wife file a joint income tax return, you receive Social Security, and now your wife has business income or earned income through like a W-2 through the S corporation, your Social Security also could potentially become taxable. And so that's something that we would want to work through in an advisor, client relationship to make sure we are aware of.
Okay, so now I have a question because, like I said, I was with GNC for over 30 years, and it's amazing how many supplement companies are out of Utah. And it's amazing how many companies, because like I said, I'm right here in New Jersey, so I'm not far from Delaware. So many companies are registered in Delaware. So talk to us about that. Why certain states are great for filing for LLCs and stuff like that. Why are certain states better than others for entrepreneurs?
So I'll preface this conversation by reminding you that CPA also stands for cannot protect assets. So if for anyone that's listening, please make sure you are consulting with your attorney, right?
Exactly. Yep.
From a general perspective, there are states like Delaware, Nevada, Wyoming, who have certain provisions in their business laws, such as privacy provisions or income tax provisions, that make it beneficial for companies to be registered in those states. Now, I say that, but I also highly recommend that if you are running a business, that business also needs to be registered in the state within which you are doing business. Because if something were to happen, that is where the litigation would take place. And if you don't have an entity registered there, you don't have some of those protections. So again, consult with your attorney, consult with your accountant to make sure that where your registrations are taking place are going to be advantageous from a liability standpoint and a tax standpoint. And you're taking some of those different ideas into consideration.
Yep. And I love it. And my friend Joe says, are those things part of the cost of operating a business? Are they tax deductible?
Absolutely. Legal, attorney, professional fees, absolutely. Those are tax deductible expenses.
All right. So, like I said, a lot of people they struggle with this whole tax thing. And I think for me, a lot of people, I don't know. And something I've learned is I don't know what I don't know. So I hire somebody that does know. And what are you seeing as far as new business owners? What are they struggling with? What does a new business owner from the other side of the desk, what do you see that they struggle with when they're starting a brand new business, tax-wise? Hypothetically.
Yeah, well, no, not really hypothetically. I mean, it is what it is. Most people struggle with documentation, keeping track of expenses, and itemizing expenses. There's a lot of easy ways to do this. If you're starting out, get a separate bank account, and everything that is business related needs to go in and out of that business account, or a card and in and out of that business card, because then your accounting is much easier. And as you start to grow, maybe it becomes time for you to implement a software such as QuickBooks or Xero to help you keep track and categorize some of these expenses. I think another big problem, Richard, is that accounting for the most part is viewed as an expense, not an investment. Whereas, you might be able to quantify an ROI to a dollar spent on advertising or marketing. It's a little bit harder to quantify that traditionally to accounting or to taxes. So I would actually encourage you to invest that money into proper structures and processes with your accounting, because you will be able to see a much quicker path to success by proper accounting methods than you will without.
Now, one of my friends is a CPA, and he also is a financial advisor. And he says a lot of people will come to me on April 14th and they would, or 13th, and say, I need your help.
Yeah.
And he'll say, excuse my language, just pay your fucking taxes. I can't help you. But on the 16th, if you come to me and say, I need help trying to, like you said, make sure I get my tax house in order, I can help you on the 16th for next year. But I think a lot of people will think, well, I'm just going to pay my taxes and whatever happens, happens. And then when they get hit with the tax bill, then they're like, I should have prepared. Do you see that a lot?
Yeah, you know what? And I think historically accountants have not done us a favor themselves, because accounting is traditionally thought of as looking back and keeping track of everything that has happened. However, my opinion is that your tax return is a direct reflection of the planning and preparation that went into it, not just a recollection of what has happened. And you can manipulate a tax return before you go to file it during the year, before you actually sit down to file it. So I would wholeheartedly agree. I'll have people that come to me on, March 14th and 13th and say, hey, I need to file my business tax return. What can I do to lower my tax bill? And my reaction to them is, well, let's start having a conversation for this year, because there's not a whole lot we can do for last year. So yeah, you're planning. It's always there's another advisor who's on social media quite often, and one of his most recent reels talked about 2 tax filing seasons: the actual tax filing season and the preparation to the tax filing season. And I would say we're starting to get to a point where the preparation of the tax filing season is coming into play, where you've got to start to plan and prepare for what you're going to be putting on your tax return for 2023.
Okay, so now I have another question. This just got sent to me. When a person starts a company, maybe they start an e-commerce company, and like I said, hypothetically, we're not getting anybody jammed up. We don't do that. But if somebody starts an e-commerce company, eBay, whatever it is, Amazon, and somebody buys something for me and I ship them my coffee, do I got to pay taxes even if it's e-commerce, or is that something new rulings that come down recently that we don't know about?
Yeah, really good question, Richard. So I'm assuming you're referencing what would be referred to as a sales or a use tax on goods and services and products, right?
Yep.
So the first thing that one would need to do is they would need to determine whether or not they have what's referred to as a nexus or a physical presence in the states within which they're selling their service or their product or their good. Those nexus rules are different in every state, and so those can be quite confusing and complex. In fact, we just went through that with a client that we have last week in determining whether or not they'd have to remit sales and use tax in a state that they're starting to sell their product in. So you would want to determine whether or not you have nexus in that state, and nexus can be defined as having a physical location or selling a certain amount of units or dollar amount in that location. So that those would be some things to consider. But yeah, sales and use tax actually puts more businesses out of business than a federal income tax every year, and historically. So the sales and use tax is actually a big issue that you're going to want to keep track of if you're selling things online or at a physical location.
Okay, now you've been in the game a long time. You've seen a lot of different things. What would be your top 3 piece of advice for a brand new business owner that started today, Monday, June of 2023?
Number 1 would be organization. Keeping your entity documents, your expense reports, any receipts or invoices, keeping them in some sort of organized manner, whether that be physically or digitally, is a very important part when you're trying to scale your business, and in the event that you get it audited or examined by a tax entity like the IRS. So that organization would probably be number one. Number two would be your relationship with your advisor. Again, like I mentioned earlier, I think a lot of people get into this situation where they view accounting as an expense rather than investment. But I promise you, if you maintain and keep a good relationship with your advisor, a paying relationship with your advisor, you will start to very quickly realize that your accounting and your tax planning is an investment. So the relationship would be number two. And again, number three, I think it comes down to mindset, which we talked about already. Don't let the tax tail wag the dog. Don't be so afraid of paying a tax, because the more taxes you pay inadvertently means you're probably making more money. However, again, we bump up to number two, which is that relationship, because as you're planning with your advisor, even though you can continue to make more money, I promise you there are lots of ways that you can continue to pay less in taxes.
And that's one thing that Robert and Sharon said. They said, I rather overpay my lawyer and my accounting. I rather overpay so to make sure that I'm getting the right information,
Yep.
because if you're going to, and I'm not trying to knock them, but if I know, like, we have our accountants, they do our work, they know the ins and outs. But if I just take my stuff to H&R Block and say, all right, guys, go,
Good luck.
it's just going to be general. It's kind of like they're not going to go into detail. Like when I have you on my show, I'm asking you detailed questions. But if you had lunch with some other people, they're not going to have the details. And I believe that like you said, it's an investment in your future. It could be an infinite ROI, building a relationship with your with your accounting firm and with your lawyers. There's because every time something comes down the line, I'm going to be like, hey, bro, whatever information you got, send me. I want to be on the top. And if I'm paying you more than everybody else, when something comes down the pike, you're going to be like, hey, Rich, I got something for you. You know what I mean? So it's all about, building relationships. So the last question is, how do we find you? How do we support you? If we want to set up a time to sit and chat with you, how do we do that?
Yeah, well, thank you, Richard, again. So the easiest way to do that is probably on Instagram. My Instagram handle is @TheBradySlack. And in my bio is a link where you can go view different videos, different resources, whether that be LinkedIn or Twitter or YouTube. I have a YouTube channel with different videos that I post. And you can also schedule a consultation directly through the link in my bio on Instagram, or go view some of the different podcast episodes. I also host a little podcast that I started recently with some great guests, and there's some free education and resources there before becoming a client and seeing if it's a good fit.
I love it, and I want to thank Todd for hooking us up, making want to give him big shout outs. So guys, if you have tax questions, because I always have tax questions, I'm always like, where, because it's one thing to Google something, but if you can Google 1,000 different things and get 1,000 different, I want somebody that's immersed in it, that is their life, is what they do, instead of just going to that one place for 3 months out of the year, and then you got to worry if they did it right, if you're going to get sued or not. So guys, make sure you reach out to he's very affable, especially on LinkedIn. I love his IG account because I'm learning so much. I've been binge watching everything on IG. So I just want to say, brother, thank you so much.
Welcome.
And I'm truly humbled and grateful that we got together, and hopefully we can build a generational relationship.
Thank you, Richard. I appreciate it. Thank you for having me on.
All right, guys. So remember, vertical momentum, the only way to go is up. And like I always say, I'm a big Joel Osteen guy, and it's your choice to be the victim or the victor. Hopefully you guys make the decision to be the victor this week and not the victim. I love you guys. Have an amazing week. Brady, brother, have an awesome week and kick ass.